Hello everyone, my name is Isaac Wolf, and today I will be showing you a presentation talking about the differences between Amazon's new banking initiative and traditional banking initiatives that we've seen in the past. First, let's take a look at Amazon Pay, one of the major clients and kind of major money makers for Amazon, or at least allowing them to make more money in different sectors. Amazon Pay has really expanded to be an almost ubiquitous option as much as PayPal has in the past. In a lot of different services in almost every single vendor, you can find options that range from Amazon Pay and PayPal, though PayPal probably still has a larger market segment, well, does have a larger market segment than Amazon currently does. The thing that gives Amazon a great benefit in the payment space is because roughly almost 57% of US households have a Prime membership. So there's a massive customer base to reach out for with this type of product. An important thing to note, as we've seen kind of as the sort of titular question of this final project, which is Amazon really invading into the space of traditional banking? And so far, at least in the Amazon Pay sector, we don't see that happening. In a lot of ways, Amazon has created the use of Amazon Pay to have more frictionless alternatives within their own marketplace. It seems like Amazon is mostly focusing on trying to become independent financially, not in terms of money, but in terms of actual products that can all be held inside of their single ecosystem. And then that leads us to another option that they've given, Amazon Lending, within this ecosystem. So Amazon Lending is an exclusive program for small and medium-sized businesses within the Amazon ecosystem that sell on the Amazon platform. And Amazon has extended $5 billion in small and medium business loans through partnerships with firms like Goldman Sachs and Merrill Lynch to create these massive amounts of lending to existing, pretty much what for our Amazon are business partners, the major businesses that sell on their site. Again, we see not a huge merge into third-party lending to non-Amazon affiliated businesses. We see some consumer lending, but only in the US and only to existing Amazon Prime customers. And across the board, we see Amazon again reinforcing that they are trying to push the narrative of making as much of an independent ecosystem as possible. And again, both Amazon Pay and Amazon Lending do make money for Amazon, but in a lot of ways they don't act as a major catalyst for revenue. They are a support aspect that allows more payments to process, more things to go through Amazon. A good example that I like to use is think of the Applebee's in Times Square, or the Apple store on Michigan Avenue, or any other major store in a downtown US city. The majority of that space is usually used for advertising. It's not about turning a profit with that product. Again, Amazon is still making interest payments on are still receiving interest on these loans, but again, they're trying to force it as a way to open up their ecosystem and create more frictionless options for their existing customers and partners. Lastly, we have Amazon Insurance, and this is where we start to see the actual fear that a lot of traditional banks have around Amazon's new initiatives about them trying to invade the financial space fully. And what we see is that Amazon has finally rolled out a car insurance option in India, but they've stayed completely out of Western markets when it comes to third-party or non-Amazon affiliate types of insurance. So far, the only types of insurance that Amazon offers and partners with within most Western countries is consumer electronic or other product insurance for when you buy something from Amazon. Again, it's all integrated within their system. You don't buy insurance on a product you bought at Best Buy with Amazon, you do it for Amazon products. So again, we see another notation that Amazon, again, is just reinforcing their existing ecosystem. But we also see, on the other hand, that in other developing markets where they don't nearly have the same level of competition and worry that they have in Western markets, and not the same level of regulation, they are opening up into these areas where they're expanding beyond their general values and available product line. So when looking at this, it's important to start to realize, is Amazon pivoting? Are they pivoting to a model where they do want to invade the financial space? They do want to become the Bank of America? And to that, I would say, not yet. It's kind of an ominous thing to push it as. But at this moment, Amazon, if they plan to open up into a full financial institution within Western markets, they are not letting it be known to everyone. They've been partnering with banks, not working against them. They've been working with existing insurance underwriters. They have even mentioned in many press conferences that they're not looking to set up checking accounts, though that has changed in the recent year or so. But a lot of their products are centered on trying to support existing Amazon products. My estimate would be you would not see the resurgence of a massive Amazon bank for at least another 5 to 10 years in Western markets. And again, we have to think, as we've seen antitrust and other regulations come into place, there could be sort of an aspect to Amazon that is trying to keep away from becoming that banking entity within the US, because if it was ended up being the source of an antitrust lawsuit, Amazon would then have to break up into multiple companies, which is the last thing they want to do. Many are already calling for that, and it could be a way that Amazon is trying to avoid it by slowing down their banking operations. Even their lending model went down by about 5% last year. Again, these are all supportive services for Amazon. And though I believe that they take away a piece of market value from other insurance companies, other banking companies, they aren't invading home insurance or car insurance in Western markets or health insurance. So we are seeing the start of a foothold, so to speak, but the heavyweight champion that a lot of these businesses are making them out to be, they haven't developed into that yet. And it remains to be seen how far they'll take it given current regulation. And with that, that is the end of my presentation. Thank you so much.